Today we're looking at the Cavalier Court Apartments. It's 40 units and they're asking $4 million for it on the coast of Oregon. So I got this offering memorandum and let's just take a quick peek at it. Here's what the buildings look like from just a single picture. We get a description where they say it seamlessly blends a serene rural atmosphere with the convenience of public sewer and water infrastructure. That's so convenient, I guess. It's located directly across from a very cool rescue district, and it's only a brief 4-mile drive from downtown Astoria, which is in like the upper northwest corner of Oregon. And the current apartments not only offer immediate income potential, but also hold significant room for growth. So we care about that, and let's take a look at that. But first, let's take a look at some pictures. All right, so it looks like a typical apartment style type of place. We've got some laundry, we've got the indoors. Yeah, looks just like a standard place. Now, it's not a standard apartment building. It's a bunch of individual like duplex types of homes is the setup for it. So you can see there are all these places. Let's take a look at the map view. Looking at the map, we can see that it's a whole bunch of buildings. And honestly, my very first reaction to this is that is a whole lot of roofs that need to be fixed and a lot of foundations. But you know what? That's okay. For the right price, we can always deal with that kind of stuff. If we zoom back from it a little bit, okay, we can see we're on the edge of a smaller type of community type place. We're near a river. That's actually pretty cool. And let's see. Okay, and there's Astoria, the big city that's near it, and that would be the 4-mile drive that it's talking about. It's still quite a ways from Portland and Vancouver, so it's not really a suburb of that. It really is its own little town type place. But all right, so let's take a look at the property income details. According to the offering memorandum, it's currently getting about $417,000 a year, and expenses are sitting in the $193,000 for a net operating income of $207,000. Now they think, given some rent increases, which could just naturally happen in the market, that we can actually increase that net operating income up to $377,000. So the current cap rate is 5.2, which honestly is pretty good for Oregon area. But once all those rent increases are into it, it could actually be as high as 9.45. All right, I'm interested. Let's throw it into the spreadsheet and see what happens. So it appears that we've got 40 units. Most of them are 2-bedroom, 1-bath for an average rent of $869. And again, given some of the research, we think that rents could actually be as high as $1214 on average. And we got a purchase price of $4 million. This is all according to the marketing package. What they've said, they think we can get $417, as we saw earlier. We've got some vacancy loss for an effective gross income of $400. And then once we add all of the expenses, and I didn't really see anything that was a major red flag for me, we've got our net operating income of $207. So those numbers align. Awesome. Now, what I care about is the in place, and this is the starting point for my analysis, and then we move it into the stabilized, saying once we do the rent increases and all the repairs, what will this actually look like? So you'll notice here I've got a very high projected, and that's because this is the gross potential rent. If all of the leases were at their max possible values today, here's what it would be. But obviously that's not the case. They're actually like 40% below what they could possibly be. And that to me gets me excited because I'm like, all right, just naturally they're already low, so there's some built-in upside to this property. The other big change I made was for the vacancy. They have a vacancy loss of about 5%, and I usually put in a standard of 15%. And so that's going to change the values that I have just a little bit. The only other really big expense that I changed was having a replacement reserves. And this is just saying about $10,000 a year's worth of stuff is going to be repaired that I'm not aware of. And so that all goes into a savings account and then over time gets spent. And for now, that's the assumption I'm going to go with. And that wasn't in the offering memorandum, and that's okay. The big difference on a stabilized versus the in place is on a stabilized, I think I'll actually get those rents up. Now, obviously, I don't think I will have 100% of them always at market rate all the time. So there's still like a 2% fudge factor in there saying, yeah, it's just not going to always be there. Otherwise, the rest of it's the same. The only other change that I made was I increased the maintenance and repairs just a little bit. And that was really just trying to align with what are some industry standards for that. All right, so now let's actually take a look at the output for this thing. One of the things that got me excited was that the seller was willing to carry some financing. As long as you could do 40% down, which in this case is $1.6 million, they would carry a loan for the rest, 30-year term, 6% interest, which isn't amazing, but it's fixed and it's within reasonable rates for what you get today. In terms of units to rehab, I didn't actually know, so I said, well, probably about half of them need some work on them, and I put it in the $5,000 range per unit. It sounded like they were in pretty good shape, so I didn't put much, but I wanted to make sure that I had something done, and I said it would be about 8 months to complete all of that. And these are all numbers that I can change and tweak over time, and so we can play around with, okay, what does it look like if this actually takes 2 years to do all the turnovers? Right now I've got an assumption of 5 years, no refinance, and so the total project cost is going to be about $4.4 million. That's to buy it, and that's to do all the repairs and to have enough for a reserve. And so the equity that I would need in order to purchase this property comes out to just over $2 million. Now for that $2 million, what we get is an internal rate of return of 14.6, which honestly is great. A cash-on-cash return of 3.6, and so that's how much money we're going to be taking out of the property every single year. It's a little lower than what I would want, but hey, you know, at least it's positive. For an average annual return of 36%, good luck getting that in the stock market, and for an equity multiple of 2.16. So what that means is for every $100,000 you put in, you can expect to get back $216,000. I have that cap rate purchase at about 4%. Again, if you remember in the operating memorandum, it had it at 5.2. So I'm saying it's a little bit lower than that. And that's really driven by my increased vacancy rate. And the yield on cost is that exact same number of saying, okay, once you've bought it and you've done all the repairs, here's what your new derived capitalization rate is. And I've got it at 7.4, not at 9.5. And again, it just has to do with some of the assumptions that are different. One of the things that gets me really excited about this property is this gray versus green bar. So the gray is me doing some quick research online to say, okay, what are market rents actually going for a 1-bed, 1-bath, for a 2-1, and for a 3-1. And you can see there is still some significant upside, even given some of the estimates that I was given. And so the green is what it is currently getting, and then the light green is the target. That's the delta for what we think we could get. So it looks to me like even this is a conservative estimate for what could happen with this property, which honestly is pretty exciting, and one where it's worth doing more due diligence to figure out, all right, how could this actually work? Now, one of the things I want to play with is the timing of all this, because I think that's going to matter a lot. So instead of saying we're going to do all of these changes in 8 months, because we're in Oregon, we know it could take a little bit longer. Let's say this is all going to take 2 years to make this transition. Over in my stabilization assumptions, as you can see, I've got 8 months, and instead of 8 months, we're going to say it's 24 years. And for my own sanity, we got to make sure to label that so that I know that I did it. All right, let's see what the difference is. Ha! Not much. As you can see, the cash on cash is a little bit lower. Your internal rate of return is a little bit lower, but honestly, it doesn't make that big of a difference overall, which is actually a pleasant surprise. And that's something that is what I would want to look at is like, what's the flexibility on that? Finally, let's get a feel for the sensitivity of the purchase price. They're asking $4 million, but that doesn't mean we have to offer that. So what if we say, you know what, we're going to come in at 3.5. Update this to 3.5. And now you can see that our internal rate of return has jumped up an entire point, so has our cash on cash return, and this is starting to look like a much more interesting deal. So my big takeaway on this particular property is that the broker did a great job of pricing. They clearly did the research, they understood all the numbers and the math, and priced it just so it would catch the attention of someone like me. It's right at that point where you go, oh, this is a good deal, I'm interested. It's not amazing, and it's also not way overpriced, so good for them. For me, the next step would be, okay, I want to learn more about some of these assumptions that I have. How long will it actually take to do the stabilization? What are the expenses involved in that? And then how many units do I have to do all that to? And really try to dial in some of those base assumptions to get this thing stabilized, because I'm not really 100% sure on what that is. But on the first pass, this is a very interesting property. Thanks for taking a look at this property with me. Man, I love just analyzing and checking out deals. If you liked it too, please like this video so that I know to do more of them. And if you have a specific area that you'd like me to dive deeper into, leave a comment and I'll do another video where we really look into that aspect of the property. Thanks for watching.